All right, welcome back. We got a lot to talk about today, so let's get on into it. First, are we welcoming Joe? All right, let's bring Joe to the show. We got our good friend Joe Epel from Xapo Bank joining us to talk shop this morning. Joe, how are you? Always a pleasure to have you back here on the Blockchain Report.
Hank, thank you so much for having me again. I'm always, pleasantly surprised when I get reinvited, and it's a highlight of my week. I'm doing very well, thank you.
Yeah, I don't know who keeps doing it. Someone just keeps sending you an invite, and I've become accustomed to seeing your face, so I ain't complaining. We're excited to have you back, Joe.
Likewise.
We got a lot to talk about this morning, so we're gonna get going with the top story, and we'll bring you back to chat about in just a sec. Sound good?
Sounds fantastic.
Rock and roll. Here we go. So first up today, Michael Saylor. We know he's not having the best day. MicroStrategy stock is not doing great today. However, he has still chosen to make his way back in front of the cameras, and this time he's saying Bitcoin won't just rival gold, it'll grow to 10 times the size of it. Because when Saylor makes a call, he doesn't do modest. He goes straight for the jugular of every gold bug still polishing their bars in a basement somewhere. In his CNBC interview, Saylor called Bitcoin the next frontier for both national reserves and corporate balance sheets. He argued that corporations are done with the old tricks, cash piles, stock buybacks, whatever Wall Street used to call strategy. Instead, Bitcoin strengthens financial positions in a way that nothing else can. He even threw shade at the U.S. Strategic Bitcoin Reserve Bill, saying Bitcoin should be considered money while everything else, yes, everything, is just credit. And in case anyone missed, he took Goldbug's favorite phrase and remixed it, because Saylor knows exactly how to make them scream into their gold-plated pillows at night. He also pointed out the obvious. You can't teleport gold. You can lug it, insure it, ship it off, you can tariff it, and lose it at sea, but you can't teleport it. Meanwhile, Bitcoin, of course, does exactly that. Instantly, anywhere in the world, without a customs officer or a vault. And the numbers, well, they back them up. Strategy itself is sitting on nearly 640,000 Bitcoin after dropping another nearly $100 million on 850 more coins. In fact, over 190 publicly traded companies now hold Bitcoin with combined institutional ownership over 1.5 million coins. And let's not forget the ETFs, right? BlackRock and friends are still hoovering up supply like Bitcoin Roombas. Even Deutsche Bank has stopped pretending gold is enough. They're predicting central banks will hold Bitcoin by 2030 right next to their dusty bullion because scarcity, liquidity, and trust all point to the same conclusion. Gold had a good run, but Bitcoin is the upgrade. So when Saylor says Bitcoin will be 10 times bigger than gold, it doesn't sound crazy. It sounds like every gold bug in the world is about to experience the world's largest collective migraine. We're bringing Joe in. Joe, when you hear Michael Saylor say Bitcoin will be 10 times the size of gold, does that sound like maximalist hype or a realistic trajectory from your perspective inside the banking world?
I mean, it's a tough one. I think my heart definitely wants to say that indeed he is correct. But of course, this is
Mm-hmm.
Saylor, and Saylor has a very vested interest in saying that. One way or another, though, I think at the moment, what we are definitely seeing is Bitcoin's rise in prominence as a hedge, as a store of value. And Bitcoin certainly has a capped supply, which gold, though it is a finite resource, we do keep discovering more of it, potentially implying that its supply is not so immediately limited, and therefore perhaps there is room for its value to decrease over time. Whereas Bitcoin, we know we've only got those 21 million, and once they are all mined, that's all she wrote. So for sure, I think the equation could potentially be built to make that true. But I also think we tend to focus a little bit too much on these high minded big statements. They're good for grabbing attention, but I'm not sure if they are ultimately the best thing to be planting in everyone's mind. That Bitcoin is, this for sure get rich quick scheme that will make everyone generationally
Right.
wealthy. Well, I do believe that personally. I don't know if it is necessarily the best specific approach all the time.
No, I totally get you. Like, we love a big headline. I mean, we live in this attention economy, so everybody flocks to those. But it does, to your point, kind of set these unrealistic expectations that can kind of take the idea of what Bitcoin is and turn it into something else, like a Ponzi scheme or whatever. And we just know that's not the case. I actually just saw yesterday, there's a great Netflix documentary about Lou Pearlman, who is the manager of the Backstreet Boys and NSYNC. And that is a Ponzi scheme. That dude did like $1 billion Ponzi scheme. So this is not, but yeah, they're fun, but I don't always like the framing they leave Bitcoin in at the end of the day. But what are you going to do? Now,
Exactly.
Joe, gold
Exactly.
has always been kind of the boomer hedge, right? And if Bitcoin were to actually overtake it, what do you think that means for how central banks and private banks like Xapo are going to be positioning their reserves in the future?
I mean, I think it sets places like Xapo Bank up for a very strong future, and it's a future that we definitely believe in and are very much prepared for. Certainly, if Bitcoin does overtake gold, we would, I assume, see even more kind of strategic stockpiling of Bitcoin, not just by corporates and entities, but also by nation states. Although we do see a little bit of that happening right now. I mean, one would assume that a new global reserve is coming into be, and as a result, more would pile into it, and then it becomes a self-perpetuating cycle of ever-increasing value. So for sure, I reckon as we even start to approach that, and we are getting close, but when we get even closer, I don't think anything could be more bullish for the future of Bitcoin as a store of value and also just as an asset.
Yeah, I mean, Bitcoin is the superior new technology on the block, and I know gold's had a good run, and people are comfortable with gold. They've had it for a long time. You can touch it, you can hold it, you can feel it. But, superior technologies, the horse and buggy got replaced by the car, and there were people at the time that were like, nah, I'm good with the horses. But eventually, superior tech wins out, and we're seeing that happen right here. And assuming that does play out, as you and I both think it does, and Bitcoin starts eating gold's market cap, what role do you see for banks like Xapo in that world? Do you see them becoming more custodians, lenders, maybe something else entirely as we enter this new frontier?
For sure. So I mean, as Bitcoin becomes more and more of a global reserve currency, I think that what Xapo Bank has been doing for the last, about 2013 to 2025, 12 years, quick math, has been positioning ourselves to be the leaders of this new banking era. I think what we end up seeing then is Bitcoin becoming more of a traditional financial asset class that's used either as an underlying technology for settling transactions, which we are already seeing all across the world, or simply as a hedge and as a reserve asset. And places like Xapo Bank, which have been doing this for over a decade, we are well set up. We know exactly how to keep Bitcoin as safe as it can possibly be. We also have built financial tools around it. You can deposit your Bitcoin into your Xapo Bank account in our military grade storage, and you can take a loan out against it in order to get access to capital and spend it on your day-to-day items or on large purchase items like a car or potentially soon a house, depending on where you live in the world. And I think what that means and what this future state that we're talking about looks like is every single bank potentially offering that kind of custodian and also leverage possibilities with their customers' existing Bitcoin deposits and holdings. I do think a lot of banks and a lot of places have a lot of catch up to play in terms of becoming regulatorily compliant in the manner that Xapo is, as well as building the tools and technologies that they need to actually properly safeguard their users' funds, which isn't something that you can learn overnight. So I do hope people look to Xapo Bank as an example of how this is done right, and the future may be coming for everyone, but in many ways, Xapo has been building that future. It's already here. Sign up and you can be part of it.
Yeah, I mean, absolutely. There's no one in a better spot right now to provide for the new Bitcoin era that we're entering into other than Xapo. And you can already see it from a lot of the big banks out there. They're already starting to try and play catch up. I mean, over at Morgan Stanley, they just decided that there's enough demand for Bitcoin that they are going to begrudgingly start offering crypto to their clients, even at the chagrin of Jamie Dimon. So it's happening, and Xapo Bank is in an absolutely great spot to provide those new services for these new customers as we enter this next financial era. So that's exciting stuff. We got another story to talk about here, so hang out. Joe will be back with you in a sec, because right now it's time for Blockchain Without Borders. Let's run the stinger, guys. All right, so now we're taking a trip around the world, and let's see what's going on in Brazil, Thailand, but let's start first here with the UK. You see, in London, a newly listed company called Bhuddle has announced its very first Bitcoin buy. The grand total, 100 BTC. The cost, a little over 11 million bucks. Average price about 113K per. That single purchase alone puts Bhuddle in the top 100 public Bitcoin treasuries worldwide, ranked at number 98. And in fact, if we bring up our little leaderboard here at bitcointreasuries.net, we should be able to see their new entry on that leaderboard at 98. Are we able to get that up, guys? Well, they're working on it. Okay. Well, until they do, buying 100 Bitcoin and you're suddenly a global player, not the worst. And we'll see it here on the screen here in a sec. But to catch up, they'll have to do a little more stacking because there's a lot of people ahead of them. SmarterWeb, the UK's largest public Bitcoin treasury company, holds over 2,500 BTC, worth around 284 million bucks. They're ranked 29th globally. And of course, Michael Saylor's strategy, still the king. Strategy just added another 850 more Bitcoin last week and now sits with nearly 640,000 BTC in their vaults. So Bhuddle is starting with the kiddie pool, but they say they've got a long-term plan coming. According to their statement, they'll be making disciplined acquisitions to build a strategic Bitcoin reserve while also powering Lightning Network operations. Or in other words, stack sats, run nodes, collect routing fees. The company listed Monday on the Aquis Stock Exchange under the ticker HODL, raising about $21 million. Now, Aquis is the UK's bargain bin exchange, all right? Cheaper and smaller than the London Stock Exchange, but perfect if you're, a growth firm looking for liquidity without the hassle. CEO Freddie New is a former solicitor and co-founder of Bitcoin Policy UK. Backing them, Coin Corner, which holds about 14% of the shares. Coin Corner CEO Danny Scott now serves as chief Bitcoin officer and a director. And of course, we got Adam Back, one of Bitcoin's OGs. He holds over 25% of the shares. Back is also preparing to head up the Bitcoin Standard Treasury Company in the US after it merges with a Cantor Fitzgerald SPAC and lists on the NASDAQ. So, Bhuddle may be small today, but with Adam Back at the table, they've got some serious heavyweight connections. And investors, they're already piling in. The stock is up nearly 35% since listing, now trading around $29 a share, which is not too bad for a firm that currently owns fewer coins than some random whale's cold wallet. But hey, everyone's got to start somewhere, right? And when your ticker is literally HODL, at least no one can accuse you of hiding the strategy. All right, Joe. 100 Bitcoin is pocket change for whales, but enough to make a company a top 100 treasury. What does that say about how early we are still in corporate adoption? What do you think?
Oh, we are still so early. I mean, just looking at this chart here, you can see, Saylor is far ahead of the curve and is certainly going to be the key player for a long time to come until we start seeing nation state balance sheets get on board. But there's a lot more room there and a lot more opportunity for corporates to start stacking those sats. What that also means to me as a consumer, not as a corporation, although maybe one day, is that when that demand does pick up, we are going to see a massive liquidity crunch as those enterprises that have a couple thousand or a couple hundred Bitcoin on their balance sheets start to want to 10x that, which they very well may, depending on what happens in the next couple of months in the world as a whole. So for me, we're still very early, and there's definitely a big liquidity crunch coming up when everybody who isn't yet in the race decides it's time to get in it.
Yeah, I think right now it's around, I've read about 1.5 million Bitcoin are held by corporate treasuries on the whole, and that's out of 21 million, and we still only have like 190 companies that are in this game yet. So I think that liquidity crunch will be coming sooner than later, very much to your point. But I do have a question for you. Do you think moves like this from smaller UK firms helps legitimize Bitcoin in Europe's financial sector, or is this small enough where it's barely registering compared to giants like Strategy and BlackRock?
I think it's very interesting because the UK is in a very different regulatory place than the United States and various other parts of the world where Bitcoin adoption is becoming less of a no-go for your more traditionally regulated financial institutions. The UK is also the financial capital of Europe in many ways, always kind of has been and still holds that title. And so as we start to see more companies within the operating conditions allowed by the FCA to stockpile or add Bitcoin to their balance sheets, I think it's a very positive signal that not only are more regulators starting to allow and starting to see this as something that is a legitimate financial action, but that isn't just localized to the United States. I mean, if I visually think back to the chart that you had up, I want to say like 98% of those companies are based in the United States or China. And it's fantastic to see another global Western power start to inch up that list and start to acquire some sats on that balance sheet. Ultimately, very positive sign, and I hope we see more of it.
Yeah, I mean, despite the small size, it is kind of nice to see more companies creeping up with the Bitcoin treasury play that are outside of the good old US of A. And despite the fact that it is only 100 Bitcoin, Bhuddle does have some nice backers. I mean, Adam Back himself and Coin Corner are standing behind them on this. So do you feel like Bhuddle's credibility with those types of people at their backing outweighs their small stack right now? It makes it seem a little bit more substantial maybe than just some company buying 100 Bitcoin. What do you think?
Yeah, absolutely. I mean, you can't take these things out of context, and the fact that they have that context behind them implies that this is probably just an initial foray, and perhaps we'll start to see them acquire a bit more. But ultimately, I think it's just a positive sign that we're starting to see this balance sheet acquisition occur in various other borders, but across borders in various other parts of the world. And let's keep an eye on it and see what happens and who else joins this list. 100 Bitcoin's a good starting point, and hopefully we start to see more.
Yeah, absolutely. And if you were at Xapo, if you were advising a new public company that was interested in dipping their toe into the Bitcoin pool, what would you tell them to start off with? Would you recommend they start small and build, slowly like Bhuddle's doing, or go big out the gate like Saylor did? Because you kind of have to weigh the risk, but then the opportunity. Because if you buy a lot now, you're probably going to get it at a cheaper price, but then you're incurring a lot more risk in the near term. But you also, if you don't buy too much now, then you're probably missing out a lot of gains in the long term. Like, what would your strategy be for a new company coming to you and asking how they should accumulate Bitcoin?
Well, I mean, it's a great question. Firstly, hashtag not financial advice. But I think the advice I would give corporates is very much the advice I would give anyone who comes to me with that question, which is, what is your kind of financial stability at this point? Are you in a position in terms of your balance sheet to be making investments? And how diversified are your current investments? How much risk aversion do you have baked into your current investment strategy? And for sure, for corporates, it's a different ballgame. It very much depends on the local regulatory authority of where their company is incorporated and where they are, financially licensed. And so all of those factors become a very complex picture. And I think what we tend to see is a lot of corporates want a bespoke kind of setup in terms of how they go about custodying their funds and what they want to do with those funds, whether they want to just keep them in a safe place or whether they are looking to actively and aggressively increase their stockpile. So the advice I would give is, it depends on your risk appetite, and certainly it depends on the risk appetite also of your board and your shareholders, depending on your company structure. And what we don't want to see is companies making reckless investments into something like Bitcoin that they aren't able to necessarily follow through on, which I think would result in bad press and generally a bad scenario for corporate Bitcoin treasuries in general. So I would always say, act within your existing risk framework, buy some, see how it goes. And generally the best strategy is to, dollar cost average and put it into a place where you're not going to need to access it. And if you do need to access it, come to a place like Xapo Bank, where we can, A, for a start, keep it safe for you, and B, offer you the ability to access capital without necessarily having to sell that asset in the first place.
Yeah, no, all that makes a lot of sense. I mean, the Saylor playbook is great, but it's really not a one size fits everybody type thing, right? I mean, every business has its own, like you said, their own risk appetite, their own financial situation. So just buy and hodl doesn't necessarily work for everybody. So yeah, I think your bespoke approach makes a lot of sense. It's almost like you've done this before. I don't know how you're so good. Now, one thing I thought was funny about this story was that their ticker symbol is literally hodl. So, Joe, from a banking perspective, does branding around Bitcoin memes help adoption? Is it clever marketing? Or maybe is there a thought where it's almost kind of the jokingness of it maybe takes away from the seriousness of the financial play? Like, do you think maybe it almost detracts from it because you're naming the symbol kind of after a meme? What are your thoughts?
I think we're in the meme. I mean, we've long been in the meme era. We only have to look at Dogecoin to understand that, and then the meme coin, frenzy that we've seen in the past, and we will probably continue to see. I think having the ticker HODL, if anything, appeals to the existing Bitcoin maxi crowd and the community that we have. And I don't think it detracts. I think we're definitely in the era where little signals like this tickle people's interest and fancy, and definitely make you feel a little bit more inclined to take them, add them to your watch list or pump some cash into them, because it is a world where attention captures everything. And if I'm not going to forget that ticket, right? HODL is going to be stuck in my mind now. And that means you're top of mind, and that means I'm going to want to, think of you next time I'm investing in a stock. So I think it's a smart move, given the internet age and the meme age that we live in.
Yeah, I think you're right now that I kind of had a little time to chew on it. I mean, once the Department of Government Efficiency officially started being referred to as Doge, I think everything was fair game in terms of naming symbols and acronyms like that. So I think you're right. All right, Joe, hang tight because we're going to take a trip to Brazil here real quick, because Orange BTC has gone full Saylor mode. The company just bought over 3,600 Bitcoin for nearly 385 million bucks. The goal, build up a strategic reserve before going public. Brazil already leads Latin America in crypto adoption, both corporate and retail. So Orange's buy is basically a flag plant, declaring we're going public and our balance sheet is Bitcoin. The model comes straight from Michael Saylor's strategy playbook. Start hoarding Bitcoin in bulk, then use it as your corporate reserve. And it's not just Brazil, okay? Corporate Bitcoin adoption is now global. As we spoke about earlier, there's over 190 public companies holding Bitcoin currently. And together, those institutions control over 1.5 million of those coins. That's worth hundreds of billions of dollars at today's prices. Now, why? Because unlike fiat or bonds, Bitcoin supply, as we know, doesn't inflate away. And while Ethereum slipped, the ETH-BTC ratio fell below 0.039. This is showing investors are rotating into Bitcoin as the hedge. Now, Orange's move also follows the wave of treasury stacking that has inspired companies across the world. Japan's MetaPlanet, Europe's SmarterWeb, and now Latin America's Orange. So with 3,600 Bitcoin, Orange immediately vaults into the ranks of serious treasury players. It's a $385 million bet that Bitcoin is the only reserve asset worth holding. And in Brazil, a country already leading the continent in crypto adoption, that bet looks less like a gamble and more like a sign of the times. So, yeah, from Washington statues to London rookies to Brazilian whales, Bitcoin keeps proving one thing. It's the hardest money, the loudest protest, and the only asset everybody wants on their balance sheet. We're bringing Joe back. Joe, Brazil's Orange BTC just stacked over 3,600 Bitcoin. Does this mark Latin America's arrival on the global Bitcoin treasury map? What do you think?
I mean, if this doesn't mark the arrival on the global, Bitcoin treasury map, I'm not sure what else would. It's a big chunk of money, and as you already said, Brazil is leading the LATAM community in terms of adoption on a retail and business side. So perhaps it's just the next evolution of that. It's already where we see so much activity and where we see a huge amount of public interest. And this is definitely the next step. So I think it's the sign of more things to come.
Yeah, and part of me wonders, we've seen Japan's Metaplanet. Then we saw Europe's Smarter Web, now Brazil's Orange. Are we maybe entering this phase where every region wants to be its local Saylor or run that playbook? Because, with Strategy, we've seen their stock price go up like 10x since they started doing it. Metaplanet's been on a great run since they started doing it. So do you think maybe part of the idea for them was, or Orange is, hey, we're going to be the first big player in Latin America, and maybe they'll see some sizable gains the way we had seen from Strategy and Metaplanet? Do you think that maybe influences their way of thinking about this at all?
For sure. I mean, I think that definitely checks out. I don't think everyone who's jumping on the Bitcoin treasury bandwagon is doing it for fun, right? I think they've seen that there are real benefits to it from a stock price perspective. But also, we're all living in the same global economy, which we've all noticed is a little bit unstable these days, with trade wars and with tariffs and all of these things not looking to subside anytime soon. And Brazil, in particular, getting particularly hard hit by tariffs with the United States, and that directly impacting their economy. I wouldn't be surprised if we see more people following suit, especially because besides the hedge and the ability to kind of internationalize your reserve, it's clearly got a positive impact on the stock, and that means that the people like it too. So why not? Why not add more?
Yeah, and an interesting thing about this particular case, Joe, was, they're doing this before going public. So my question to you is, what risk do these companies face tying themselves so closely to Bitcoin before they actually go public? And do you think investors reward, or are they going to punish that type of strategy?
I think it's very contextually specific, right? So I think perhaps in more developed countries where people are much less used to seeing something considered as a risky asset on the balance sheet of a publicly traded company, maybe it would be less well received. But I think in other parts of the world where perhaps we're a bit more used to local economic instability and being at the mercy of, US dollar trade policy and US dollar currency fluctuations, maybe it's seen as more as a positive. And I think especially in a market like Brazil, where we have massive Bitcoin adoption and interest, and at Xapo Bank, we see a huge number of people signing up from Brazil. I think it's a country that is pretty much on the orange pull trajectory, and I don't see a reason why Brazilian investors, at least, wouldn't want to capitalize on that, and other international investors who are looking to invest in companies that have Bitcoin on the balance sheet would probably also see it as a positive way in. So I think it's a strategy, and I think it is one that we've seen pay off in other parts of the world, and I don't see any reason why it would be different in Brazil.
Yeah, I think you're right on that one. And if the Bitcoin treasuries keep spreading worldwide the way we're kind of seeing right now, do you see a future where banks like Xapo need to service or partner with these corporate stacks directly?
I think very much so. The question that I always comes to mind is, if I am a corporate entity in whatever part of the world and I want to get Bitcoin on my balance sheet, how am I going to do that, right? Where is that Bitcoin going to be custodied? Who can I trust to keep my Bitcoin in such a way that I am not violating any of the financial regulations or obligations that I have as a publicly traded or even privately owned company, depending on where I'm incorporated. And so a place like Xapo Bank, which has been built specifically for all of these things, is in many ways the obvious choice, where we can offer corporates or individuals the means to safely custody their crypto or their Bitcoin specifically in a fully regulated bank and VASP. And not only just custody it, but also have access to additional financial services on top of that. So for sure, as an entity, Xapo Bank is incredibly well positioned for this, and I do hope that we, are top of the list when people are looking at places to custody their balance sheet.
Well, I got to say, Joe, you make some pretty compelling points for you and the team over at Xapo. So for people in our audience that are like, you know what, maybe I do need a professional custodying and giving me advice on how to best manage my Bitcoin, what's the best place I can send them?
I would say Xapo Bank. Yeah, I think that's definitely the best place. You can find us at Xapo Bank app on X or xapobank.com. Feel free, reach out. Let's get you onboarded.
And Joe, you always have really interesting takes, and I love listening to your view of the world, and I'm sure our audience does too. You got a good Twitter account they can check out too, right?
That's true. It's still early in the game, but you can find me at Zimbo Joe. Yeah, it's Zimbo Joe. A reference to my Zimbabwean place of birth and the interesting economic experiences I had there.
I love it. And we love having you on the show, Joe. As always, thanks so much for joining us. And we can't wait to have you back real soon, bud. It's always a pleasure.
Thanks so much, Hank, and the team at Roxom. Always a highlight of my week, as I said. Have a great one. Here's to October.
Oh, you're too kind. We'll see. We'll see you soon, Joe. Thanks as always. All right, now we're taking a trip over to Thailand because their central bank woke up and decided to hit the freeze button on life itself. They locked down 3 million bank accounts in one swoop, all in the name of fighting financial fraud. Yeah, it was aimed at scammers running mule accounts, as they call them. But in the process, they froze the accounts of regular people, small businesses and expats just trying to pay rent and grab a pad thai. Victims have lost more than 6 billion baht to scams in just the past year alone. So the government said enough is enough, and they slapped on daily transfer limits and started combing through people's accounts. That means grandma can now only move 50,000 baht a day, which is apparently enough for groceries, but not for the massive hospital bills she might actually need to pay. And for the rest of Thailand, the cap is 200,000 baht per day. Officials promise that this is temporary, which in government speak is code for, we'll get back to you on that sometime between now and the heat death of the universe. Critics are already pointing out the obvious. Freezing millions of accounts might stop scammers, but it also erodes trust in the entire banking system as a whole. And when people stop trusting banks, you know what happens next? Hello, Bitcoin. Investor Daniel Batten called it free Bitcoin marketing. Jimmy Costro at the Thailand Bitcoin Learning Center said this story should go global. Or in other words, Thai regulators are moonlighting as Bitcoin's PR team. Meanwhile, small businesses and tourist hubs got absolutely hammered. Expats couldn't move money. Everyone ran to cash withdrawals and alternative payment systems. Authorities claim that by 2026, banks will have biometric verification and AI-driven fraud detection in place to make this less of a disaster. But until then, expect more frozen accounts and more people realizing that Bitcoin doesn't care about bank holidays, daily limits, or government overreach. And the cherry on top of all this, Thailand is simultaneously rolling out a crypto-friendly tourist program called Tourist DigiPay. Foreigners can spend crypto, convert it to baht, and use QR code payments, all while regulators monitor it inside a sandbox. So yeah, the same government freezing millions of accounts is also telling tourists, come spend your crypto here. It's almost like they're daring people to ditch the banks. All right, we're taking a quick break, but when we're back, more blockchain report coming up, and we have our second special guest of the day who will be joining us in just a bit, so stay tuned for that. Blockchain report coming back to you after this.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.